Had this trade plan for a short. I didn't take it, quite simply because I've been unwell and I didn't set an alert. Oh, actually I did set an alert, but for higher up. See that? So I wanted this. Yeah, I did set an alert. But you know, any one of these SFP pivots would have been fine with this idea. And the trade plan was a back test of the point of control. So if I clear this up for you a little bit, it's looking a little bit messy, so it's hard to see what's going on. And let me just increase the time frame. Get rid of this line here. So we had this point of control, this red line here, and this is the value area of the whole range. So as we entered the range, you see here, as it goes up past this little bit, I'll show you, see, as it comes up, that's the range, that's where the range begins. So this whole thing is a range, and what you can do is you can use this tool, the fixed range volume profile. I'll quickly show you how it works actually. So this, some of you might be wanting to use this tool, so just add it to your favorites toolbar, and then basically the way to use it is you take it from the candle that enters the range. So that candle enters the range, and you take it to the as far as you can to the current price, and that captures the whole range. And the settings, if you look at the settings, I use a row size of 148. Now the value area volume, its default is 70. You can, if you want a slightly smaller value area, you can use 68 as well. Give you a slightly smaller value area if you want to be more conservative. But because 70 is the default, I just use the default because I want to see what everyone is seeing. And that will give you the volume profile on trading view for this exchange. So I'm using Bybit inverse perpetual, which is the inverse derivatives product on Bybit. And obviously you can use any exchange, and every exchange will have its own different volume profile. And so often it's just a good idea to compare the big exchanges as well, because sometimes you'll get a divergence, you'll get different volume levels. So this will give you the volume level for Bybit inverse perpetual, which is used by chart champions, and Daniel from CC Pool recommends using this one to chart on for Bitcoin because it's the most accurate and the levels are respected correctly. And also you don't get scam wicks either, which is really important. And then yeah, now you can see the volume. So I've got a lot of these lines. Let me just clear them up. So we just go back to the basics and see what's going on. It's quite messy right now. Get rid of all of this. Yeah, so it's clearer now. And so I took along here in my short idea, which I didn't take because I've been ill. I've not really been well. But it was this. If you remember in the stream a few days ago, maybe two days ago, I wanted an SFP of that line there. And so this is the thing about SFPs. Which one do you take? And it's a good question, because sometimes you'll take this high will come in it'll take the first one, and then it'll come and take the second one, and then take it to the third. Basically, it could take as many as it wants until it finds an equilibrium before the price reverses. So you can't really know, and that's why you need to use risk management to correctly position yourself with an invalidation. So if it doesn't work, you can actually have another attempt. So, but my idea wasn't to take the SFP. I wasn't going to take the SFP. If you remember, this was the trade. The back test into the point of control was the trade, because I wasn't worried about I just wanted the liquidity to be taken, and so I was hoping that more liquidity would be taken, but obviously it only managed to take liquidity. Let me see how far it got. Did it get past that level? No. See that? So it didn't even manage to get the liquidity above this level. See that? That means anyone who had their stops above this level is still in the trade. They were not stopped out. And the stop is a market buy. So anyone who had their stops above this pivot here was stopped out. These people were stopped out, and then the price reversed, so their stop was wrong. Whoever had their invalidation here was wrong. But if you had your invalidation here, you were fine. And actually, the correct invalidation in this range, the correct invalidation is the top one. That's the correct one. Yeah. Any one of these levels can be taken, but you don't want to see that top one taken. And if you do see the top one taken, you'd expect either a squeeze, a continuation, or you'd expect an SFP for a down move. There's only two things that can happen when you take that top level. But these ones are arbitrary. They're kind of in between, and it's not easy to trade them, because which ones do you take? I mean, this was the first one, the first level. You could have SFP traded that, and but the actual trade was the back test into the point of control. So if you zoom in, my idea was actually correct. It worked, but I didn't take the trade, so I can't brag about it. I can't take credit for it. But the concept was correct. You come and you take liquidity, which we did. You lose the point of control. You actually, in this circumstance, we didn't claim it. So I was thinking maybe we claim it and then lose it. But this is a much quicker. It's a quicker action. We just took liquidity, and we came to back test. See that yellow line? Back test the point of control. That's what that white candle is. Comes in, back test. Can't close above. Instant short. And then if you do like a little range pool, not a range pool, a fib. If you do a fib on, you'll see it perfectly lands into the golden pocket of this mini downward move from this pivot down to there. Comes into the golden pocket, lines up perfectly with the range point of control. Doesn't close above, closes underneath, sells off with a bearish reversal candle. You see that red candle, that white candle, green, that green candle followed by that red candle? That's a reversal, and it doesn't look back. You could have market sold that candle, and what's more, it closed underneath these green candles. See, it closes underneath all of these candles. It's really bearish. And then you had the increase in volume on the next candle, you see. So as soon as someone looks at this and they see that reversal, they see this pattern, it's a reaction into the golden pocket with a swing failure, they load up the shorts. These are shorts. Well, it could just be longs just taking profit and just going, okay, this is it, this is done now, I'm out of this. And you know, there's a mini kind of head and shoulders here as well. You know, you see that neckline break. There's a few things going on here which give you a bearish bias. You have a little head and shoulders pattern forming here as well. Right now, see that? You have a neckline there. This is a back test of an SR flip. I think it's hard to trade now. Like, this was the trade because the invalidation was so small. See? And actually, even though here I've got the invalidation up there, the reality is that that's the invalidation. And your target is, you've hit your target because your first take profit would have been this SR flip. Then it came down and hit. This move up here is a take profit. This is a take profit move. This isn't longs. We haven't got new longs here. It's the thing people have to understand when the price goes up. Is it new longs or is it take profits? And understanding this is going to help you a lot. Clear this out now. Where are the longs now? Well, it's quite easy to see where the longs are. I think they're down here. If you wanted to long this, where would you long? You wouldn't long here. Even this daily level, look, we've got a little daily level here. I don't like this daily level. And this is like a bear trap actually. Sorry, a bull trap. This candle, it looks bullish, but it's not. The reason why it's not bullish is because it doesn't close higher. The next one takes the liquidity from the previous day high, and it's already closing under, coming into the point of control. It's rejected the point of control again. That's bearish. We could probably close much lower today. Probably. This Bitcoin doesn't look strong. Doesn't look strong at all. And no one is going to market into Bitcoin right now. Yeah, why would you? The price is coming down. You set your orders lower, and then you wait for the price to come into your orders. That's what you do. So I mean, if someone really wants to, they could place an order here, because technically that is a daily level right there. That's a daily level. See that? That hasn't been tapped yet, hasn't been touched, but you also have one here. Why would you not long that one? If you long this one, you're still making a higher low. You see, this is what I was like, in my mind I was thinking, we are still in this flat top triangle. You see, we're still in this kind of flat top triangle. I think we're still making higher lows somehow. Could draw that properly. See what that looks like. Maybe something like that. Or something like that. What do you think? Let me get rid of the colours. I don't like these colours. Then on the background, let me make it purple, pink. Like, no. Kind of like purple. Can I make it thicker? Yeah. There. Look at that. What do you think? So I thought maybe, you know, like I took this long here. This is SFP. It was an SFP of, yeah, it was an SFP of this low here into the value area. This pivot here. And took that long. The idea was to trade it from the value area low all the way up to the point of control. I've taken most of the profit now. I've taken 3 take profits. I'm still in the trade with a runner, but if this continues to show weakness, you know, I'll probably get stopped out. That's fine because I've made the profit. I should have been in a short, but I didn't take it because I wasn't well enough to pay attention. You gotta be well when you're trading. You gotta be 100%, you know, because you're trading with real money. It's not a game, and you got to take it seriously. We're making our lower highs here. See that? Lower highs. This is a pretty obvious pattern that's forming. You see with these, well, you want this to break for a chain, for an up. Like I think as long as this continues, and this is the thing, this is also like there's a lot of patterns going on here, and sometimes we get patterns within patterns. You know, on the lower time frame I showed you a potential head and shoulders pattern that's forming here. See that? But there was also a really mini one up here. See that? So you have patterns within patterns that form. But we also have another pattern forming. You know, there's lots of patterns. There's also a potential, there's like an inverse head and shoulders here forming, an inverse, which is bullish. See that? Yeah. So you have bearish patterns forming, and you have bullish patterns forming. And right now it's a battle between bulls and bears. Right now the bears are winning, but maybe the price needs to go low enough for the bulls to give it a shot, you know. So usually that's what happens, that, you know, bulls take turns, bear takes turns, bulls take turns, bears take turns. They take turns. It's like a game of Risk or Monopoly. Each player gets their turn, you know. And sometimes you go to prison and you're stuck, and then the other player keeps on rolling and you get hammered. That's what this is like. Usually each player gets their turn, and sometimes you get stuck in prison, in jail, and then the bulls or the bears have a rampage and they just buy up all the property, and you're behind. So you always need that get out of jail card ready. Let me see, is there a long here that we can take? Have a look. See, this is underneath the daily level. I don't like it, it doesn't match up. I would prefer it to be higher. You know, and you want more than one level of confluence, but you do have an SR flip, you do have this wick here. It's it could form a little support. This could fake people out, you know. Price could go down, it could go up. People can get bullish. They're gonna be looking at this inverse head and shoulders. It'll stop out the late shorts, and people can head back down. Make a lower high. Break. I could do that if there's no interest here, and actually I don't know if there is, because On the 12-hour time frame, this is like a reversal pattern here. See that 12 hours closed above that wick. Now it's took the liquidity up there and it's coming back down. So this is all a reversal right now. We're in reversal territory and the price is falling. It's going to probably fall flat into this level because there is no liquidity. I don't think there is, because I think if you're going to long, why would you long here? Why would you not want to long lower down? And as long as we, you know, technically, this is the higher high up here on the daily time frame I'm looking at now. This is the higher high. We haven't made a higher high here, so higher high, is that a higher low? Lower low, lower high, lower low, higher low, lower high, are we about to see market structure change? There on the daily time frame, take out these lows, break down, like a little breakdown. I mean, you wouldn't expect a crash. I think what you would expect is this: you would expect market structure change. To lose, I mean, you have to lose the value area low. I think that's quite bearish, actually. I think it was bearish enough to lose the point of control the first time. We've come in to backtest the point of control, so that's quite bearish too. We've taken a little bit of liquidity, not much. I would have preferred that we'd taken all of this liquidity, but we haven't. We come and lose this point of control. Now, the thing is, there is liquidity here. See this daily level here that I've got marked out here. There's liquidity there, and that would be an SFP of this level here, this wick here, and it would make a higher low on this flat top triangle. But I would have expected us, like if we were really making a flat top triangle, I thought maybe we'd go up again, you know, before we came down. I don't like that we've failed to hit the top of the triangle on this run. I don't like that. So now I'm thinking maybe it's not a flat top. Maybe it's just a triangle like that. Just a triangle. Just some kind of equal triangle. Something like that. You know that these can go either way. They don't have to go up. I mean, it's a pennant, right? On an extended range, that's quite bullish in the sense that this is what needs to form before it goes up. You know, but we have a few, like we have, look, 10th of January, and this makes sense actually, because the ETF is scheduled for the 10th of January. I don't know if anyone's been following the news, the Twitter news on the BTC ETF. But the 10th of January is the D-Day, is the landing day. So it would make sense that this just goes sideways until the 10th of January, right? And then we'll get a move, like a big move. Like this is what's happening. We're going to get a squeeze, I think, right now. So it's not a flat top triangle to go up. It's actually, this is what it is. We're gonna, the price is going to squeeze until we finally get a breakout, one way or the other. And no one knows which way it's going to go. It's impossible to know. It's absolutely impossible to know if this is going to go up or down. Yeah. One thing for sure is these kinds of triangles have crazy breakouts because you have higher lows and you have lower highs. And so what happens is you have a cascade of stop losses, a cascade, you know. So for example, now that we've made this pivot high, people are going to put their stops there, people are going to put their stops there, people are going to put their stops there. Now we've made this, look, stops there, stops there. We're going to come down now. Maybe tomorrow we'll come down and there'll be a long opportunity here. And there'll be more stops here. And so you have this cascade. So eventually what happens is when the price kind of squeezes, then if it goes down, once it stops these people, you get a squeeze, and then it squeezes these, and then it squeezes these. So it squeezes all of these stops in one go. Psh, that's how you get the breakout. So you get like 3 levels of squeezing, and they all cascade into each other in one go. That's what happens. And it's the same thing going up. If it goes up, it could do the same thing. You get, these will get squeezed, and squeezed, squeeze, squeeze. You get like triple squeeze. It goes up. Yeah, because obviously people put their invalidations at the different pivots. They're not all going to put it at the same place. And that's how this works. It's just how it works. I didn't make this up. It's just how it is. So I think this is what's forming right now. We have an equal triangle. I think there is a long to be had, and I think you should be, like, the short to be had was last night. And so I think you could short all the way down, potentially look for short opportunities on a lower time frame down to this bottom of this triangle, and then look to long it back up. That's what I'm thinking. And actually I know already that there's a good long opportunity lower down at the bottom of this triangle, because I had it already from before. If you take this pivot here to the top here, no, not that one. If you take this pivot, this one here, to the top here, like any one of them really. If you take this, any one of them really, look, they all kind of line up. They're all lining up. See? I think this SFP into the daily level, it also lines up with the golden pocket. Any one of these pivots, any one of these pivots, see that one, on this one to the most recent one, you've got, this is like a strong area of liquidity as well, because it's an untouched, it's an untapped daily level. There's going to be a lot of limit orders there, plus it's an SFP. So you're stopping all these people out who've put their stops there. You know, and the thing about this is people get really bearish in the lows. And then what happens is they start shorting the lows. You lose this value area low. They start shorting and then as soon as the price goes up, they're underwater, and so they just have to market buy, and the price suddenly goes up again like that. It just kind of just like squeezes back up, because the people have been heavily as soon as you lose that level, people start shorting, like these breakout shorts. They're like, oh my god, it's breaking down, but actually all they're doing is they're filling the positions of much bigger large limit orders, large long orders down here. So I think the trade to have, if you want to, of course you can use spot and scale in, but I wouldn't do that. I don't think you need to do that. I think what you do is just SFP this level, wait for a reaction, and trade it right back up to the top of this triangle. That would be the trade. And then reverse, just keep on doing that now. I think now that we see what's forming, and then we've got 10 days to go, more than 10 days to go. We've got like nearly 2 weeks to go. This could just be doing this for the next 2 weeks, getting tighter and tighter and tighter. So you could just will let it go down. As it comes up above this level, take the long. This is your invalidation. Let it go up, trade it all the way up, however it forms. Yeah, comes up. And take the short as it breaks down like that. You can take the short as your invalidation. Do the same thing, just keep on doing it, and then you probably have like two trades, 3 trades maybe off the edges. I think this long is the next one, and obviously if you wanna short, look at this. I mean, the problem with shorting now is that we're shorting into support. This is quite bearish. These 2 green candles, continuation candle. You could have shorted those candles in 2-hour time frame. How do you short this now? You want to pull back. It'd be nice, like if we could come back up, take that. You could short that SFP. You know. Like I think that would be fine. If you wanted to, if this presented, like if there was an opportunity, I mean it's looking like a head and shoulders, right? But maybe it just goes up one more time, takes the liquidity there to come back down. You know, as it does that, you could short that, have a really small invalidation, and then yeah, maybe it goes all the way down. You know, that's possible too. It's like a, obviously it could stop you out. You know, it could, who knows what can happen. I don't think, it doesn't look like it wants to go back up there. It doesn't look like it, but anything can happen. You know, so you always have to have an invalidation, because you could short anywhere. You could short that, but the price could still go up. So you always have to have an invalidation, so you know that you're wrong when you're trading. The most important thing is to know when you're wrong, otherwise you lose money. You have to know when you're wrong. This one's a nice trade. I think go into the daily level, SFP, take the long. Yeah. And I think it's the same thing, you know, like a lot of people are like trading alts now. So this is just Bitcoin. It's good to know what Bitcoin is doing over this period, because it's going to help you to trade altcoins as well. If the Bitcoin is going nowhere, which is what I'm basically saying, Bitcoin is going nowhere. So you could go and trade your altcoins. I was looking at matic yesterday. Have a look. Oh god, have I lost it? Oh, there it says. So we have this consolidation above this breakout. This is normal. If you take the high, I think the minute you take that high, you're going to get a little bit of volume. You could just, that's the trade really you could take. That's the trade. Breakout trade now. I think that's the trade that you're looking for. Otherwise you're just consolidating in this range. Let's just draw the range. That's, look, can you see the volume tool? It gives you the range. And we're just range bound at the moment. Point of controls in the highs. That's not bullish. That's actually, relatively speaking, that's bearish. You kind of want that point of control to be lowered down. The reason why you're looking for like a breakout is because you could also end up with a failed auction. You know, that's the reason why it's possible. This could just be a failed auction. It could be a deviation from the break. It cannot be we just don't know. That's the thing. So you need confirmation, and I think ideally what you want in this kind of range is some kind of flag. A flag would be the best, because what a flag is are lower highs, lower lows, and effectively what you're doing is you're creating a cascade, like I was describing earlier, a cascade of highs to squeeze up, and you're taking the liquidity from the lows every time. The liquidity is being taken from the lows each time, and you're still in the range. You're taking the liquidity, you're still in the range. So that's it's telling you something. It's telling you that you're taking liquidity from the lows, but the price is staying in the range, and you're building all of this liquidity in the highs, so that when you eventually squeeze, you cascade squeeze, and that causes the price to break out. So that's why flags are really the best ones. And I can't see a flag right now. There's no flag at the moment. Don't know what this is. This is just nothing. This is indecision, actually. This is what this is, indecision. I mean, it looks like consolidation above the highs, but I think I would like to see an actual back test. Let me draw the line properly here. I would like to see a reaction on this line here to confirm an SR flip. We haven't had that yet. Oh, give me a second. I have to do something very critical. Make a payment. It's not the one. Sorry, I'm just, sometimes I have to do things like run errands in the middle of my live stream. So when I do this, I'll send it, I'll talk to you again. Hold on, apologies. sorry, yeah, what was I saying? Yeah, so you want to like a flag. It looks like it might be also forming some kind of pennant as well, but I can't really tell. And this is a poor low here, square. So I wouldn't be surprised if we did take this low. There's liquidity there. Could this be a pennant? You know, could this be a pennant, or are we forming something else? I have no idea right now. It's I think with this kind of range, it's almost like take profit and accumulation, and then eventually one side is going to win. It's either going to be the bulls or the bears, and I think some people who longed down here are taking profit now. You know. Yeah. So that's matic. I think I would like to see a test, a back test. But I mean, the thing about cryptos, sometimes you just don't get back tests. Sometimes you just have to break along the break. Was this the back test? Look at this wick, daily wick from yesterday into this SR flip. Was that the back test? Was that the back test? The best kind of back tests are red candle back tests. You know, like not green candle back tests, red candle, because red candles mean the bears are in control. The bears have taken control of the price. And so if you get a red candle and it reacts off that level that you're interested in, then it means the bears have failed to break that level. If the bears are in control, then they should close lower than that level. That's what red candles mean. So if we get a daily red candle now and it closes and it reacts and it closes above that level, then the bears have failed because they're in control, but they've failed. If the bears are in control, they want to close underneath that level because they're in control. You see? So when your candles are green, bulls are in control. When your candles are red, bears are in control. And each one is trying to prove themselves. And the way they do that is by pushing the price as far as they can until it closes. And then it kind of takes turns. That's how it works. And so and it's usually on the daily time frame that you're looking for that kind of action and reaction, right? So now, like matic, when you're looking at it, you're seeing the bulls have been in control 4 days in a row now. Yeah. Well, today's the 4th day. And so I'll give you an example of the bears being in control and failing. Look, you see this expansion candle here, from here to here. See, for 2 days the bears were in control, 1, 2, and they failed to do anything. They failed to close lower than this candle, this green candle. That was their objective. They want to reverse this candle. This second candle here, this red candle, it took the liquidity and it needed to close here, down here. And it couldn't even close lower than the previous red candle. So it couldn't even close lower than the previous red candle. So 2 days in control, and it failed to close lower on the second day that the bears were in control. Yeah, that's why it went up. Literally, that's why it went up. The bulls just took over. They were like, "Fuck this! We're in charge now. You failed. You can't do it." And what's more, it's increasing volume on the bears, and the price has failed to close lower. So, you know, with increasing volume, you expect the price to close lower. So they failed. So that's how the candles work, you know, like the bears and the bulls, they take turns and they're all trying to prove themselves, and ultimately they're trying to push the price as far as they can to close it as far as they can. And then that tells you the story, and then you match that with the volume. Yesterday's volume was very big. Look at this matic volume. It's over twice, more than twice, 2.5 times the average. So you've had 2 really high volume days. Well, this is a really good volume on yesterday's candle. I really like that volume. It matches the previous day. It's holding the highs. What I would like to see on the daily time frame is maybe a red candle, maybe 2 red candles with decreasing volume. One would be enough for me to think about entering, but a second one red candle and another red candle, decreasing volume, just to show that the bears are in control, but they're losing there's no real interest in pushing the price down. It's like a consolidation, and then we could have like another move up. That would be, and there will be a squeeze up as well. You want to squeeze up the minute you come and close above this high now, then you're going to get an injection of volume. You're going to get people just market buying, and they'll just this token will just rally. It would just rally up, and it's got a lot of room to go. There's a lot of room to go, I think to get up to this this purple Gann line that I have. I think that will be the first point of real resistance, like about $4. From where we are now, that is it's like a 2.5x. The good thing about like these tokens like matic is they're highly liquid, so it makes it a lot easier to buy and sell larger positions without slippage, and without worrying about liquidity. That's why they're good to trade. If you're trading larger positions, that's where you get a lot of the big traders who are trading these bigger tokens. It's a lot more. It can be a lot more profitable to trade small tokens, but it doesn't attract the big traders. And I think I'm going to talk about travel now. TRVL. The problem we had with TRVL yesterday was a lack of liquidity. So I woke up at like 5 a.m. because I'm not really sleeping great. Come down with a cold, and this is what I saw. Look at this. Oh, I put a little emoji. That was for my anyway. Let me zoom in. Let's just have a look and see what's going on here. Let's try and understand what's happening with TRVL. Let me just go on to the daily time frame first. Are we on MEX? Yeah, we're on MEX. Okay. There is something else I want to show you actually on TRVL, which is quite interesting. But I'm going to hide that for now. Get rid of this fixed range, get rid of that. Okay, get rid of that. Let's just go to the basic candles. And zoom in. So I've been talking about this over the last few days and saying we're in an accumulation range, and we're probably forming some kind of flat top triangle. Did I have the range pull from before? No, that's before. Right. So basically the range probably, there's different ways of doing this because it's not very obvious, but if you want to do a range pull, you could do it like from here where it enters this kind of range, or you could do it from the all-time low, so you're gonna get the whole thing. And see where the volume is, right? So we are basically on this mini range up here, as you can see. We are above the point of control, and from the all-time low to now we're above the value area high. Bullish. It's bullish. We're in a bullish situation. From the all-time low till now, if you form a whole, call this whole thing a range, from the right at the all-time low, that's your pivot, right? The all-time low, that's your pivot. Till now, we've created a whole range. If you imagine that from this point onwards, all of this is one big range. Yeah, we're above the value area. Most of the volume is underneath us. That's bullish. We're actually above the value area high. Sorry, not value area low, value area high. And that happens to line up with the point of control of this mini range that we're forming. Yeah. So we're still bullish. I mean, there's nothing more to be said about that. That's bullish. We're in a bullish situation. And when you look at the range here, okay, well, what happened? Well, look, it's just like what I've said before. These wicks are market buys. Market buy, market buy, market buy, market buy, market buy. All of these are market buys. People are buying, market buy, market buy, 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 buy. All of these are market buys until we had a gigantic market buy yesterday. Like someone went for it. Someone went crazy. It's not the best way to buy. Really isn't the best way to buy. But people are doing it because it's a very illiquid part of the charts. We're at the lows. It's very illiquid right now. And it's very difficult to fill large positions. So if you have a higher time frame bias on this token and you're bullish, you want to fill a large bag, it's going to be very difficult to fill unless you market buy. I'm going to show you how to do it without market buying. But I'll do that in a second. So what we obviously had yesterday is the price closing above excuse me, the price closing above this value area high at midnight. The daily time frame, I mean, it's a green hammer. Yeah, it didn't close into the above it. It didn't see on the daily time frame, it doesn't close above the value area high. So even though on the lower time frame it does, on the daily it doesn't. So we haven't actually closed above the value area high. It's not something that you would just buy. You want to buy a back test into the value area high, confirming it as support. We haven't actually achieved that, so you wouldn't necessarily buy like that. You know, like I wouldn't just buy that. You know, you have to buy. You have to have a reason to buy if you're technically trying along the technically. So someone obviously went for it, and how much did they buy? Well, look, let's calculate. And this is on Max, and I'm going to have a look at the other exchanges too. So starting at midnight, 40,000, 33, 70. That's 73,000. Let me just put it on my calculator. Let's have a look. So we had from midnight we had 40,000 plus 33,000 plus 55 plus 109. It's not much. Until it finally went up to this level, 233. So only 470,000 tokens were bought up right up to this level up here. Okay, not that much. I mean, we had more buys. We had higher volume further back. I think it was on KuCoin. We had a lot more volume. I'll show you. I think I showed you before, but I'll show you again. Let me hide this now. No, actually I won't hide this because I need to show you something. Right. And then the negative volume comes in. Market sell. These are market sells. Market sell, market sell, market sell. So how much volume left the market? So we had 470 enter the market. Then we had 66 plus 29 plus 101 plus 177. 373. So about 70,000 more left the market. Basically all of this rise was reversed in terms of volume, right? And what I saw, I mean, I woke up at like 5 last night. I don't know why I woke up, and I saw a couple of people messaging me, and they were like, look, I saw some tweets, and I was like, okay, this is interesting. And are we going to the moon? And then I saw the price was basically where it was when I went back to bed. But what I did see, which interested me, is look, this coming into the point of control, taking out the liquidity at these lows. That's a reaction. You see, that's a reaction. You don't sell into the point of control, yeah. And you've automatically you've got a reaction. Yeah, it's gonna this is another test. The point of control is holding, so naturally I bought. Of course I did, because this is what I want to see. I want to see the point of control acting as support, which it is. Yeah, I get it. This is a really bearish candle. This is an engulfing on the 4-hour time frame. It's an engulfing candle. Higher volume, okay, but we're on support. So if the bears really want to shine, now is their chance. Do it. You want to sell now. You're selling into support. Yeah, the bears are going to fail because this is a bearish candle into support. It's not the right place to sell. You're selling into liquidity. There's a lot of people interested in accumulating at this level, and it's you haven't lost support. We haven't made a lower low. If anything, we've made a higher high. This is a higher high. Look, we closed higher. And when I look at the other markets, the other exchanges, look, it's a higher high now. We've actually made a higher high. We've closed higher on the 4-hour time frame. Let me have a look at this. This is another high. We've made a higher high. We've gone and taken liquidity. We've made a higher high. Every single exchange is saying a higher high now. So we've made a higher high. So as far as I'm concerned, bullish market structure on the daily time frame has been confirmed. Now, okay, I don't like that candle. We've taken liquidity from the highs. Actually, on MEX we haven't taken liquidity from that high there, but on I think on KuCoin we have. Yeah, see, I even marked it out as key, huh? So on KuCoin we took the liquidity from there. So if this was like Bitcoin and you could short this token, you could have shorted to cover yourself as the price came back down, and you'd be in a short right now and you'd be in profit, yeah, because we've taken that liquidity. We've SFP'd that high with increasing volume. That's a good short. But you couldn't short here because you're shorting into support. You'd have to short here as the price. Basically, if I zoom in, I can show you. Let me hide that. See that key level there. So I've got this level marked out. See that? So if we had a derivatives of TRVL where you could short this token, this would be a great short, because you go over this level, and as soon as you lose it, a little back test, there's your invalidation and there's your short. So you're basically shorting at 4112 and your invalidation is 4301, and you're in a short now. Now you're taking profit, and so in the future what happens is your stop loss is here. Your stop loss is a market buy. So in the future what happens is that if and when the price kind of works its way up and stops you out, you get a squeeze. Market buys at the highs. Market buys at the highs. And that's how you get markups in price. So I have been talking to the team, and I've been telling them, every time I talk to them I tell them we need to be on derivatives. We need to be on Bybit derivatives, because that's where all of the traders are, and that's where there's a lot of liquidity in derivatives. And also, you know, I've been telling them, like, it allows people to cover their positions. Rather than sell TRVL, they can just short. They don't need to sell. I don't want to sell TRVL ever, but you know, if there's no derivatives, I'll have no choice. If I want to take profit, I'll have to sell. But if the way big traders trade is that at key levels, let me show you what I mean. So I'll give you an example. Obviously we're kind of diverging from our original conversation, which was this price action locally, but I think this is quite important. See this on this chart. Let me hide that fixed range now. In this chart, there are certain key levels, right? Levels of interest. And I'll give you one of them, for example. I'll give you one level of interest. So we're somewhere around there. So these kind of wick highs. Yeah. No, let me give you a better example. Let me do a full fib first. Oh, look at that. So we actually came into a level of interest, which was the 236, this pivot. That was a level of interest. And look how it corresponds with the lows of this range here. And it came, so that is a level of interest. I mean, that pivot hasn't been, the liquidity on that pivot hasn't been taken yet. So this is still a level of interest right here. We're still in a level of interest, right? So it's very possible that the price in the future will come back up and do the same thing. Very possible. And the range going up from here to here is 72%, and the range from here back down is 42%. 42. So basically everyone's, from last night at about 3 AM till now, everyone's portfolio went down 40%. Okay, it went up. Everyone's portfolio, for a brief moment, everyone's portfolio was up 64%. Now it's back down 40%. So what would be good, and this is how big traders do it, when you get like swing failures of these levels, And obviously we didn't get one here on the MEX. Let me have a look at, see, we didn't get one on Gate, and actually Gate is looking more bullish at the moment than MEX. Okay. Did we get one on KuCoin? Yeah, so we got one on KuCoin. And actually I don't like that. I like, when you're doing swing failures, I like them to not diverge on exchanges. I like them to all happen at the same time. So I personally might not have taken that. But what the big trades, and actually this isn't really a good place to short anyway. You really want to short at much more distinct levels. And so, yeah. So this pivot here, for example, and there's no corresponding fib level to match either. So it's not necessarily a great short either. But what would be a good short is if we lost this 382. And the problem then is you're coming into this this 9-cent mark. It's a lot of diverging stories here. But anyway, just to carry on with my example, let's go to the all-time high. That's the easiest one. That's going to be the easiest short. Right up here, if the price is working its way up and it's working its way up, it comes up and it SFPs the all-time high. Yeah. Why does it SFP? Well, it's going to SFP because people are going to be taking profit. Yeah, swing failure pattern. So what is a swing failure pattern? It's when the price goes up above that level briefly and then it comes back under. That's called a swing failure. Yeah. What you want to see for bullish continuation is you want to see the price go up, stay above, and consolidate and back test the level for continuation. That's what you want to see. That is bullish. Okay. When the price goes up and comes back under, that's bearish. That's called a swing failure. Yeah. And now, if you don't have derivatives, you have to sell your tokens. You have to sell your tokens. Yeah. Selling tokens is a taxable event. That's what people don't understand. It's a taxable event. And what you have to understand is people don't want to create taxable events. So the way to do it is to, when you're on an inverse perpetual derivatives, you can short using your tokens as collateral. So if this was BTC, I would use BTC as collateral. I can short my position, my whole position, without selling BTC, so I don't lose value on my BTC as the price comes down. And so if this was TRVL, if I was to short my whole portfolio of TRVL as the price came under, yeah, as the price comes down, my TRVL number, the number of tokens of TRVL would increase, but it would be in TRVL. I wouldn't be selling it into fiat. I wouldn't be selling TRVL into fiat. It's just that my TRVL would increase. I'd be getting more TRVL, so I wouldn't be paying. It wouldn't be a taxable event. It'd only be a taxable event when you're selling TRVL into USDT, selling one asset into another. That's a taxable event. Here, you're using your TRVL as collateral so that when the price reduces or goes down, you're making TRVL on the way down using the TRVL in your portfolio as collateral, inverse perpetual derivatives. Yeah? And then no one needs to sell TRVL. No one needs to ever sell TRVL. Whenever they want to take profit, they can short. That would be like taking profit. Yeah. And obviously you wouldn't arbitrarily take profit. You would be looking to take profit at key levels. But ultimately, the idea is that eventually what happens is that you let's say this is how professional traders do it. They'll short their whole position yeah, and then at key levels on the way down they will take profit, and that's how you get the movement. And eventually what happens is, as the price comes back up, they'll take more profit, more profit, more profit, and the remainder gets squeezed, and then you get a price squeeze, right? But at no time have they sold TRVL. What they've actually been able to do is protect their portfolio value in terms of USDT. That's what they've achieved by doing this, and it creates a lot of liquidity in the market too. So I've been telling the team, this is what we need. We need this. Like, I just don't understand why we can't get this. And I'm not in the team, I'm not technical in that sense. I don't have all the contacts, but I do know how to use the tools. I do know how to trade, and I know the biggest traders in the world. I learned at Chart Champions, and the biggest trader in the world, as far as I know, one of the biggest is Daniel from Chart Champions, and some of you might know him. And this is his technique. He will cover his whole position on Bitcoin inverse perpetuals. So he will use his Bitcoin to short, so that when the price comes down, he doesn't lose USD value, he just accumulates more Bitcoin on the way down. And we need that. We need that for TRVL. It means that people will never sell, especially the bigger players. Anyway, that's by the by. That's just a side discussion that I'm just going to keep on parroting. So right now, looking at the price action, we're into support. Now is the opportunity for the bears to shine. Yeah. Let me reverse this chart. Yeah. Yeah, I mean, if this was in reverse, that's quite bullish, huh? It's quite bullish if that was in reverse. So what do the bears need to do now to continue this moment of glory for the bears? The bears have managed to sell into the price expansion, right? And actually, I've said this before. I think this is healthy, because these candles. Let me go back into normal mode. Yeah, these candles, they're liquidity clearing candles. Yeah, you have all this liquidity that's been cleared now. So anyone who is looking to, like, if you had limit orders here, you know, just all of this liquidity all the way up to there, sell orders, they've been cleared. The order books are cleared. Yeah, and what's happening here is some people who are looking to exit the project have exited. That's kind of what you want. You want people to just exit and get out. If people don't want to be in it, we don't want them in it. You know, we only want people who want to be in it. I mean, I think that stands to reason. We want people who are going to stick with us until the end, and who are going to, you know, who believe in the team and believe in the project, and they're going to be the ones who are going to be faithful, and they're going to be ones who are going to, at the end, are going to become really wealthy. They're the ones who are going to be buying the dip every time there's a dip. That's why I bought yesterday, actually, because firstly I was buying the dip. I actually sold matic to buy the dip. Yeah, I was in a matic trade and I sold it. I closed it out because I saw this swing failure of this lows here. I saw that. I was like, okay, look, we've just swing failured these lows. And look, we're trading above those lows. It's a long. I'd buy that. And not only that, we're on the point of control. And I showed you before, not only are we in the point of control, we're above the value area high. If you take it from the value from the all-time low till now, I'm not phased by this movement down. This is just like on Telegram. There's some people who are like making some kind of FUD over the last few months, and they just exited. And I think I know who it is. Yeah, and he's gone. And so I'm going to work harder now to make sure this goes up to $25. Because then I'm going to make a video and go, ha ha ha, this guy exited at 4 cents and look at the price now. It'd be funny. It's always advisable that people who are bullish on this project have arbitrary small take profits, very small ones on the way up, just in case this happens, you know, just really small. You can have like really small arbitrary take profits. Not only does that create liquidity so that when someone does kind of want to buy a large position, that the price doesn't go up so fast, it kind of goes up a little bit slower, which is what we want. But it also means that if you do get these price reversals, you have some cheddar to buy more TRVL at the dips, you know, and that's not a bad strategy to have. So, you know, if people are looking to trade this as a little bit, you don't have to go crazy, but you can have like, you can have arbitrary levels. You can have like really small sales, really small, just in case you do get one madman who just goes buys, and then the price will correct, which is fine, and then using that you can just buy the dip. And that's actually a good way of marking up the price, you know, because not only does the price doesn't go up so far in the first instance, it means that when it comes back down, all those people who took their profit can put the profit back in, and you get a slight markup in the price. That's what we want to see, a slight every time that this happens, we want to see like a slight markup in the price. So it's not a bad idea to formulate a strategy like that, because when I'm looking at the charts, I'm seeing a lot of you know, wicks. I'm seeing a lot of wicks, and these are market buys, and it's quite a big distance away, you know, like that's 17%. Look, this wick is 14%. Last night's wick went up 57%, you know. So people can take a little bit of profit, just little bits, and then they can just buy the dip. And so that, anyway, today I bought the dip based on that. I think it's for the bears to show themselves now. This is the candle that they've been waiting for. I don't think it's of a high volume candle, to be honest with you. I'm not impressed by the volume behind this candle. It's pretty much at the same range, and usually with these kind of candles they should be much more. This is MEX. Let me have a look at the other exchanges. Okay, so yeah, see on Gate we took a lot more liquidity than the average. The average is roughly at this range. We went, so Gate, there was a lot more liquidity was taken. So on Gate it looks a lot more bearish, yeah, and especially since we've SFP'd this high, on Gate it looks a lot more bearish. And then again on KuCoin it looks very bearish, but we're still above the point of control. We're still above the point. We're still holding support. Just. Yeah. So we have to see what the bears do with that, and it'll be very easy to see when this flips, because now we have a very key area to flip into support. It's this area here, and I think all the exchanges, oh no, Bybit isn't. Bybit's telling us a completely different story. Bybit, it took a lot of liquid. Look at Bybit, it went up, Bybit went up to 5.1 cent. Still didn't take this high, and Bybit is very illiquid. Yesterday I tried to buy on Bybit, and it was I couldn't, it wouldn't work. So annoying, it just wouldn't let me. It's so illiquid Bybit. I think this isn't bad, because if we stay in the range, we're going to have another test, another push up, just to test that level. Let me see if what the BTC was looking like. Okay, so the BTC, okay, so it went into the value area low again. Yeah, we're still kind of in this crop of ETH. Can't really see anything. Yeah, so if you were to inverse this, how do the bears succeed? Well, this is the first thing they need. It's like a candle like this, because your invalidation is here. That's where your invalidation is. Very easy invalidation for the bears now. So if you're bearish, that's your invalidation. Now that we've created this candle, the bulls have a target. The bulls have a goal, and it's basically a line in the sand now for the bulls. This is the line in the sand. This is how you're gonna know. And let's go with KuCoin. KuCoin seems to have a lot of volume. Wait, how much volume was there yesterday on KuCoin? God, look at that. Oh my god. 9 million. Shit. What the hell? That's off the charts. Can you believe it? 9 million volume. I have to zoom in here, have a look. I'm gonna start charting KuCoin with all that volume. It's a pretty low volume riser. Look at this. 101. There is more volume. Look at this volume here, look. This all little outcrop was over 1 million of volume, right? And this push up, yeah, I mean, it's about 1 million in total, like 900,000. No, 1 million, over 1 million in total, like 1 million, 1.2 million. So we have 1 million here and I have a 1.2 million here, right? So whoever bought 1 million tokens here, by this point he's up 15%. Doesn't make sense for him to just take profit like that market. But he is market buying. Maybe he market sold. It's possible. So let's see this one here. Look at this. Wow. So above this key level that I had marked was 814,000 in volume in that 15-minute period. Look. Just this one single red candle. That's a sell. Someone sold 512,000 TRVL right here. $512,000 TRVL. It's very bullish actually, because the price went nowhere. It just held, and then you had a buy at 188,000 buy, a little sell. Oh, this is another big sell. 834,000 sells. We had two big sells. So that was a market sell. Someone really sold well, huh, in KuCoin. and then 44,000, that was the close, and then that was just the market continuation. 632,000, 243, and then this last one was the big one, 2 million, 2 million into support. Right. I mean, I don't know who these people are, honestly. I would like them to have just been traders looking to take profit and then buy back in, but we'll see, because what will happen now is this what I'm expecting to happen. Firstly, I think this is looking quite bearish, dare I say it. You have a really unfavorable reversal. Yeah, if I reverse this, you can see what I'm talking about. This is not very bullish. This is in inverse, so I don't want you to think this is. You see, it looks bullish, so therefore it's bearish. Like if this was to happen in a normal, regular chart, this is the right way around, this would look very bullish. Okay, because it was immediately, the price was immediately brought back up, immediately with high volume, with serious volume, right? We're still making lower highs here, and I think when you reverse it, it's the same thing. We're still making higher lows. So even though we've failed, like the bulls have failed here, the bears have actually taken control. This is looking very bearish. Now, we are above some key areas. I don't know, I just have to draw it again. We are above. You know, we are above. Look at that. See, on KuCoin, the point of control is much lower, which is actually quite bullish. And when you look at the price, it went down. Didn't even reach that. So on KuCoin, the point of control is down at 3 cents. There's a lot of volume being put out in this range. I think now is the opportunity for the bears to show themselves. Like, if we don't see it now, then that's bullish. But this is what the bears need, is a bearish candle like that. And now we'll see if people are going to sell or not. That's what you need to sell. That's your confirmation. If you're a bear, if you're bearish on this project, if you're done with this project, if you want out, this is the confirmation you need. If this is what look, someone has just sold 8 million volume, bought and sold. That's a buy and sell. Why is that showing? Oh yeah, because I was looking at the daily. So we have a buy and sell today. Oh, this is Gate. I'm back on Gate. So on Gate it's like 3 million. On KuCoin it's 9 million. So we had like a 9 million volume. That's what you need. Big volume sell. I would argue that if this just continues to range like this, you know, then it'll probably just go up. Yeah. I think now, because I think if the bears, that's basically saying the bears are in control. So now what you would expect for the bears to do is flip the value area into resistance and continue. That's what the bears want to do now. That's the thesis. The bears need to make a lower low. Yeah. So ultimately, the bears need to take it down here. This is the challenge. If the bears can't take it down here, then it's still bullish. You know, they fail. But their first challenge, and that's what it is, it's a challenge. They need to flip this point of control into resistance, because at the moment it's acting as support. Then they need to flip this value area low into resistance, because it's the low of the range. It needs to turn into resistance. And then they need to go and make a new low. Take out these lows. Okay, once the bears do that, they've made a lower low. They need a lower high. They need a lower high here somewhere. And they need to continue. That's what the bears need to do right now. If the bears are in control, this is what they need to do. And they have their candle. They have their high volume candle, which is their launch pad. Yeah. If I don't see this kind of behavior now, then I would argue that the bears are finished, because this is their chance to prove themselves. And as far as I'm concerned, I mean, today I bought 30,000 TRVL. You know, I sold matic to buy TRVL. I'm still accumulating, and I think what the community could do is have some dry powder, have some cheddar on the side, just in case, and we can just buy the dip. You know, buy the dip and punish all those people who are selling TRVL. Let's do it. Let's punish them, and eventually we're going to end up with a $25 token. Let's see, why not? But at the moment we're at a really interesting kind of decisive point, and let me see. Yeah, look, I mean, that looks like a bit of, I don't know, let me have a look. See what the volume profile is on this on these candles here. I would expect the price to come back to fill this gap up to that line there. There's a gap from there all the way down to here. It's a big gap. So basically most of the volume that was filled was here, and then lower down here there's a big emptiness in between. What usually happens when you form these gaps in expansive candles is they get refilled. So I would expect the price to go up there just to fill that gap. If that happens, then it's going to look more bullish, but ultimately what the bulls need to do, and the bulls have a challenge too as well, and this is the challenge that they have. I'll explain. Now that we have this this level here, the bulls, what they need to do is they need to delete that now. I think we need to flip this level into support now, and we get like a close here, above here, like a green candle up there, and then we just need to flip it into support, or just a little consolidation above there. That's what the bulls need to do. So this level here, this key level that I have marked out, needs to be flipped from resistance, which it is now, into support. And ultimately the way that's going to happen is by continuously testing that level. Yeah. So if you can imagine this, if we, I don't know if we are or not, I'm just making this up really, but if we're creating some kind of triangle now, that's what the bulls need to do, is make higher lows and keep on testing that level, keep on testing that level till it breaks, and then when it retraces, to hold that level, and then you'll get a continuation. That's kind of what you're trying to do now for the bulls. So I've marked out what the bulls need to do, I've marked out what the bears need to do. I think this is a really good opportunity for the bears, because that candle is a bearish candle with high volume, and we'll see, are people going to dump their tokens, or are they going to buy more? Like, this is the test. It's a psychological test. We'll see now. So, you know, I'm quite excited because every day this chart presents new challenges. There is something I wanted to show you actually, and this is going to make you really excited. So all of that's been like pretty gloomy news. And I'm going to give you something really exciting, some happy news now. So the fractal idea, not the fractal idea, the harmonics idea, I'm not canning it, but yesterday I was going over with David. His Twitter is Davo, so if you want to follow him, you should. And we go over TRVL every day. We're going over this harmonics idea yesterday, and I just, even though it looked good, I hope I haven't deleted it. I think I've deleted it. Let me see if it's on the other charts. I think I deleted it. Well, basically, oh yeah, there it is. Where is it? Anyway, something like that. It was like 618, whatever. I was messing about with it. 618, 1611, whatever. I don't think this works for different reasons. Firstly, the only harmonic where the C is lower than the A, and actually we were going over all of the different harmonic patterns yesterday with Davo. We were just going through the whole lot to see which one could match up with this harmonics idea, and it'd be a shark. The only pattern that would have and it wouldn't be a C, this would be a B, this would be the X. Anyway, is the only one where this low comes underneath this low is a shark. Just having a look at all the patterns, and actually it's a bearish shark. Yeah, a bearish shark pattern, or it would be a bullish 5-0 pattern as well. There's just two patterns that would fit. Now, if it was a shark, a bearish shark, let me try and draw it. It would look more like this. Hold on. A bearish shark is more like, I'll draw it here. to trying to use this middle pivot, bearish shark would be, would look something like that. That's a bearish shark. Looks something like that. It'd be more like that actually. It'd be more like that. You have a bearish shark. So basically this point is above this point, and there's a range. What's the range? This isn't correct. Hold on. Maximum 1.13 according to this diagram, so something like that. Let's see what other ones are there. Cipher. And the cipher. Let me try the cipher one actually. Let me see. Oh my god. Anyway, something like that. And then if you took it from that low, I don't know, it looks a little bit lopsided. So this would be lower. That's the only one where this is lower, is the bearish shark. Or you have, let me look another. The other one would be a bullish 5-0 pattern. And you can't even use, like you wouldn't even use this. You'd use, I'll just draw it for you. Like down here, up here, down here, up there, and up there, something like that. That's like a harmonic. You have some kind of harmonic like that. So it's very difficult, and you know, with crypto, you know, lines and stuff, they market buys. Sometimes the price is overextended, and it's not always easy in a very low liquidity environment, illiquid environment. It's very difficult to do this. It's a lot easier when you have much higher volume at higher prices. So I'm not kind of like, I was just like thinking about that harmonic. It's not really a harmonic, and I've got like all of the harmonics here, and it tells you exactly what they look like, tells you exactly what the ratios are, and it tells you exactly where the points must lie in relation to each other. So if A is lower than C, then A is lower than C. It can't be the other way around. If it's the other way around, then it's a B and it's lower than the X. Well, then it means the C has to be higher, and then the ratios have to be a certain distance. So at the moment, I'm not really feeling that harmonic idea. So I don't want people to get like really excited that we're going to get to a certain price by a certain time. You know, I don't think that's fair, because based on an imaginary drawing, which isn't necessarily correct. However, I did want to show you something, and I think this is correct. So I don't know if people are familiar with fib time, right? I'm messing about with fib time as a result of this, because there's two fib times that I'm interested in, but this is the main one. And if you want to draw this, no, that's not the main one. Sorry, no, that's the main one. This is the main one. If you want to draw this, I'll tell you exactly which pivots to use. But basically, take it from the tool is this one here. It's called trend-based fib time, right? I'm actually gonna delete that, and I'm going to do it again so you can see. And maybe you want to replicate this as well, because this is quite interesting. So you use the trend-based fib time, and I'll use the magnet tool as well, and you go from the all-time high. So I'm using max because that's the one where the all-time high is correct. Take it to the first significant all-time low, not these like arbitrary all-time lows, but the first one before we had the pump. And take it to the all-time low. So look for the lowest number. And it's that one, it's 2105. And then take it to the high of the pump, which is going to take us to 14,14000. Right? And then on fib time, what the values that you're interested in are the 618s and the 1s and the whole numbers, the 1.618 and the 2, the 2.618 and the 3, etc. And you carry that, okay? That should be 5. They're the ones you're interested in. You're not interested in the other fib times, right? And what I noticed just by mapping those 2 points out, so you're going from the all-time high to the first significant all-time low, the first one which we actually came to retest, to the high that followed that all-time low, right? See that? So it's actually correct. It's going all the way to that pivot, and you're zooming in all the way to this pivot there, right? And look at where the 618 lies. See that? The all-time low. I mean, look, on the daily time frame, it's actually telling you when we came out of it. See that? We had a reversal pattern, and then we had the first back test to come out of the all-time low. The 618 perfectly lines up with the all-time low, and if you look at that on a higher time frame chart, like a weekly chart, it looks perfect. Look at that, perfect. That's the all-time low. So from that pivot to this pivot to this pivot, and look, that's quite interesting. I think that's quite exciting, because it means we are following some kind of fib time. And I like that. I like that this chart isn't manipulated, and it's very organic, and it's happening as the community is growing and as interest is growing. It's very organic, and it's as the travel is expanding and growing, it's starting to reflect into the chart, you know. And I've been looking at some other charts. I was looking at another chart yesterday, and it looked very manipulated. It looked very manipulated. It looked like there was like people making the chart do certain things. And when I looked on the CoinGecko, there was like, when I looked at the chart, and it was like only 200 people, 200 watch lists, and already on TRVL that we're over 6,000 watch lists, which has grown. It's growing. So I'm actually really interested about this fib time now, and the next significant fib time period. So when I go to the 3-day chart, is the 22nd of March. So let's see what happens on the 22nd of March, or that week. That week is 18th of March. That week period. Let's see what happens in that week. Yeah. And I don't really know what's going to happen with the price, because we do have the beginning of this bearish candle formation. No, we still got 2 days, 1.5 days on the 3-day chart. On the daily, it's pretty bearish. I think as long as we make higher lows, we're good. We could just fill that up, fill that wick, and test it a few more times, and continue pushing up. I think that's what we're going to be doing. We're going to be